Yesterday's financial markets were in a complete bloodbath.
Down 24%.
Another steep plunge.
Recession is not inevitable.
Federal Reserve raised interest rates
0.75%.
Slowdown mode to stop.
High inflation.
It felt a little panicky to me.
The S&P 500 and Dow Jones dropped 3.5%, and the Nasdaq tanked 4% as the markets felt the effects of a 75 basis point rate hike. In today's video, we'll be reviewing Bitcoin's price action, talking about whether or not this $20,000 level could be broken. We'll also be talking about Elon Musk's $258 billion class action lawsuit. And of course, we'll be going over some of the other major headlines in the market right now and what you should do next. Now, if you are liking these daily market updates, be sure to like this video down below and subscribe if you haven't done so already. With that being said, let's hop into the computer, see what's going on in the market for today. Bitcoin is still trading below its 200 weekly moving average and will be ending this week with another red candlestick, but it has so far held that $20,000 level. The RSI on the weekly and daily charts are currently still at oversold levels, with the weekly being at 26 and daily sitting at a 22. So according to some market analysts, the bearish focus remains on the $20,000 level, which is the former peak of 2017 or the orange trend line on your screen. Keep in mind, at no time in past cycles has Bitcoin fallen below the high of the previous bull cycle, they state. Now, if Bitcoin does break below $20,000, the question is, where do analysts think it'll go next? Well, from our research, we're able to see that the predictions have been all over the place, and credible analysts constantly disagree with this question, showing that no one really knows. The most popular and widely believed support levels seem to be around $19,000 or $16,000 and $14,000 respectively. This still means that right now, with Bitcoin sitting above $20,000, there could be much more pain coming ahead. On-chain monitoring also shows that these prices are where whales had purchased and began accumulating Bitcoin during the 2020 pandemic. Now, although you should always take price predictions with a grain of salt because no one truly knows where the markets are headed, we have some experts talking about an $11,000 price support level. We're seeing, even on the most, I would say, extreme end of the spectrum, $4,000 by the year's end. Right now, regardless of whoever's right or wrong, the investment strategy that you should have should still remain the same. For me, I'm sticking with the principle of dollar cost averaging. Once we are able to enter a specific zone, and no matter how low the price goes, you should be setting yourself up for long-term success. Now, guys, taking a look at the crypto fear and greed index, I know not much has changed, but it is routine. Today, we're sitting at 9, still seeing extreme fear within the market. Taking a look at the charts, we're sitting at $892 billion for the crypto market. And if we take a look at most assets, even Ethereum just last night was struggling to stay above the $1,000 level. At one point yesterday during the NBA Finals, when Steph Curry was laying the wood, we saw Ethereum approaching very, very close to even slipping under towards the $900 level on different exchanges. Now, I will say on a day like this, we are still seeing a little bit of green, although there's been rapid days of lost momentum with a lot of these coins. Even seeing one of the most popular coins that took off this past year, just about 2 months ago, ApeCoin, now sitting at $3.64. The question really comes up is how much lower can the altcoin market get, because we are seeing wreckage. Even within the last week, we're seeing anywhere from 20 to 30% below averages, and it's been pretty bad. I really think, like, if I were to just be straight up, because that's what we do on this channel, it's bad, and it has been bad. But you have to realize with crypto, this is all part of the game. We've had several months to take profits. We mentioned it so many times on this channel. And if you never did because, you're trying to go long or greed got the best of you, it's okay. This is exactly what happens to investors. You take lessons learned, and unless you need the money today, unless you have debts or credit card interest that you need to pay off today, there's no reason for you to be panicking on your investment if you've always invested based on the principle that you are going long. So going to the next headline, billionaire Elon Musk back into the scene along with his company SpaceX and Tesla, which are all being sued for $258 billion for apparently building an engagement in a crypto pyramid scheme and pumping the price of Dogecoin. Now, the damages sought are more than 34 times Dogecoin's current market cap of $7.5 billion and nearly 3 times its all-time high. Now, details with this class action lawsuit entail being a filing in the New York District Court, and people are claiming that Elon Musk used his pedestal as world's richest man to operate and manipulate the Dogecoin pyramid scheme for profit, exposure, and amusement. Now, this lawsuit involves an individual named Kevin Johnson, who alleges that Elon Musk and his corporations were unjustly enriched by $86 billion due to wire fraud, gambling enterprise, false advertising, deceptive practices, and other unlawful conduct. Johnson claims that he and others in this class action lawsuit has also lost approximately $86 billion between May 2021 and June 2022. And right now he is demanding that figure in monetary damages along with another $172 billion in damages and fees, according to sources. My thoughts on this, guys: Keith Johnson, I don't know what he's trying to get out of this, but there is no way, in my opinion, that he's going to win a lawsuit to this degree. I think right now, just because we're seeing Celsius and other crypto exchanges going down, people are in this panicky mood right now in order to sue crypto projects or, you know, create these lawsuits against some of these exchanges. And I will tell you, I just don't think it's going to play out too well. This lawsuit here accuses Musk of several crimes without having any real substantial proof at the moment. And I believe it's clear to say Elon Musk has well been under the radar many times by the public. And yes, it's questionable whenever he does make a tweet and it does pump up the price of a certain asset like Dogecoin. But I would say challenging this predicament right here is just only going to bring more and more harm to the crypto world. The reason I say this is because anytime we get more class action lawsuits, we get more regulators bringing their eyes and attention. The more incidents of this happening that are clogging up the court systems with really just useless cases, I think they're going to start creating more regulation that is just going to damage the further innovation of crypto. You guys let me know how you all feel about this entire reason, because at the same time, like, I get it. People are losing money. They're not happy about it. They want to find someone to blame, point their fingers at. But, you know, trying to target someone like Elon at this point, I just don't know if that is the most logical amidst this bear market. So yesterday, Thursday morning, Elon Musk also went ahead and addressed Twitter employees for the first time in a Q&A session on how he's going to run the social media company. Now, the Q&A session has been leaked, and in the transcript, Musk shared further details on how Twitter would also be implemented into crypto. Elon Musk emphasized how payments, including crypto, are a critical area for Twitter and highlighted the ongoing issue of crypto scams on the social media platform. If you guys are a part of crypto Twitter at all, you guys will know how annoying it is. If you have ever been DM'd or followed by account, you've been tagged in a fake mint by like a fake verified hacked account, there's just been a lot of people who lost money because Twitter doesn't seem to have their security in check. I mean, I can say this about many other social media platforms too. Even on Instagram, there's like 100 fake credit Brians all the time just popping up. So I do understand it, but it looks like if Elon Musk is putting his reins back on Twitter, he's going to try his best to make sure that he handles it in the best way possible. He also added it would make sense to integrate payments into Twitter so it's easy to send money back and forth, and noting that this would include currency as well as crypto. Elon Musk also said his goal is to maximize the usefulness of the service, and he also states if one can use it to make convenient payments, that's an increase in usefulness right there. And that is something we talk a lot about on our channel, being used for utility with crypto. And shortly after that is when we should expect to see some widespread adoption. In Musk's opinion, the three fundamental areas for Twitter he also mentioned on his platform is so compelling that you can't live without it, which are going to be news, entertainment, and payments. At the end of this crypto Q&A seminar, he went ahead and commented on the prevalence of bots and crypto scams on Twitter. One solution Elon Musk put forward to address the problem of fake accounts on Twitter was verification through payment for its Twitter Blue subscription service, piggybacking on the payment system. Now, amongst all this, it sounds great, but currently, where are we with Elon Musk and the Twitter deal? We're in a bear market. Does he have the cash to afford this? He's coming back in the headlines. After making his $43 million bid to buy back in the social media platform in April, Elon Musk said the purchase cannot move forward until Twitter provides information on how many fake accounts actually exist. This was the last update we had. Now, Twitter never really revealed this information to him. Instead, they pretty much told Elon Musk to access a ton of data and to go figure it out for yourself. Now, my 6.5 cents on all this is just the fact that it's good right now Elon Musk is still actively showing his interest within Twitter. I do think there's still a possibility where he would acquire it. Hopefully, he's able to get a better valuation once they're able to actually figure out how many fake accounts there are amidst even during these pretty wintry, cold, stormy times. It definitely does suck not seeing progressions in this, because if he really wanted to buy it, I think could have happened sooner. Only time will tell. You don't want to make a dumb purchase. You don't want to buy a social media platform and realize most of these users are bots and fake. So I understand it there. Now we got to talk about Celsius, still up in the news, and we even got a lot more drama coming up on Twitter yesterday too. But before we do that, I got a quick message from our sponsor today, Public. So Public is an accessible mobile investing platform designed to help all investors from beginners beginner to expert, learn and be better investors. So on Public, you can build a portfolio with a wide variety of assets from stocks and ETFs all the way to crypto and soon even NFTs and other collectibles. Public has thousands of stocks and ETFs on the platform as well as over 30 cryptocurrencies. Now, given the current turbulent market conditions for both stocks and cryptocurrency, I also like that on Public they have an interactive social community where I can share ideas and chat with millions of investors, creators, and analysts on Public, and you can also create group chats with friends and family amongst their 3 million community members on their app. Don't forget to check out the links down below in the description, and also when you sign up using my link, you can get up to $1,000 to invest when you sign up and make a deposit. Thank you so much to Public for sponsoring this video, and now back to the episode. All right, so state security regulators in Alabama, Kentucky, New Jersey, Texas, and Washington are all adding to the fuel the fire of the entire Celsius Network's decision to suspend customer redemptions this week, and they're going ahead and making sure that some type of justice is going to get done. Now, the report mentions that Celsius has been responsive to questions from regulators and that the SEC has also been in communication with Celsius as well. So in September, these same regulators from Kentucky, New Jersey, and Texas all hit Celsius with a cease and desist order, arguing its interest-bearing accounts should be registered as a security. Back in February, if you guys can remember, the SEC and state regulators fined BlockFi for $100 million for failing to register its crypto lending product. And out of all this, it seems like BlockFi has actually been doing very well. In contrary to how Alex Machinsky and Celsius has been moving forward, Zach Prince, the CEO of BlockFi, stated, "I've been seeing a lot of speculation about BlockFi's risk management practices that I want to address. Keep in mind, BlockFi is very similar to where Celsius is earning interest-bearing accounts, but when BlockFi got dinged by the SEC, they weren't fighting on it. They accepted the fine, they paid it, and they've been building since." They stated, "While our policy is not to comment on specific counterparties, we are committed to providing as much transparency as possible, and it's important to know the following. BlockFi's risk management practices and systems allow us to act decisively to mitigate risk in accordance with our contracts, and these actions may include margin calls and asset liquidations when appropriate. This is important here. BlockFi can confirm that we exercised our best business judgment recently with a large client that failed to meet its obligations on an over-collateralized margin loan, and we fully accelerated the loan and fully liquidated or hedged all the associated collateral. No client funds are impacted. We believe we were one of the first to take action with this counterparty, and BlockFi's prudent and proactive risk management is for the benefit of our broader client base and allows us to remain open for business during times of market stress." They state, "We continue to actively lend and operate normally across our global suite of products and services. In fact, we are fulfilling increased demand from institutional borrowers at higher interest rates, similar to rates move in traditional markets, such as the US Treasury yields." To wrap it up, he says, "As we always have, BlockFi will pass on as much yield from our lending activities to our retail clients as possible, and we will share our new rates in the coming weeks, which will go into effect on July 1st. Over the past 5 years, BlockFi has been battle tested through all types of market conditions. Throughout the current period of market volatility, BlockFi continues to fulfill all withdrawal requests pursuant to our terms of service." And he states, "I couldn't be more proud of our people, processes, and systems have performed throughout this period of market volatility, and BlockFi is here for our clients, and we're here for the long haul." Now, if you guys are some OGs of the Jung channel, BlockFi was actually a partner that I'm working with. I stopped working with them when they got rid of their interest lending products just because I don't think they are good enough to promote as just an exchange when there are many other better exchanges. I will also mention to you guys, I was in contact with Celsius from their team many months ago during the first bull market, I would say last May. But even then, I decided to choose BlockFi over Celsius after even going through some of the exchanges, taking a look at their security, and reading upon what is going on, even with their team. I would be lying to you guys if I told you I knew that Celsius would ever blow up. I would have no idea on that, but I always knew that there were still certain exchanges that were following the protocols. And at the end of the day, whatever I promote or choose to partner up with, I want it to be in the best interest of my audience as well. And just seeing the entire unfolding of the developments happening with them and seeing some of the other exchanges stepping up, I'm just so glad our channel has taken the steps that we have. And hopefully you guys were not victims to Celsius from other channels taking up sponsors or just anything that would have involved you guys losing money. Less aside from the market updates, just want to say this goes into the reiteration why I don't like promoting any type of leverage products. I know there are some absolute shady exchanges that other influencers like to bring up. I just want to say, even with the markets going down, this is as bad as it's going to get. Yeah, we could see your portfolio going down a little bit more. For anyone who didn't listen, didn't take the profits off of those tables, you're not going to be in the situation where some people have lost more money than they invested with because of leverage. Now guys, one of the benefits of being amidst this entire bear market right now, seeing everything go down, is just the fact that it's not just crypto. We're seeing stocks go down. We're seeing interest rates going back up with a lot of mortgages. People are spending less money. Inflation is rampant. If stocks are at an all-time high, they're continuing riding and everything but crypto was at its current state, then I would be a little worried. But right now, crypto is following the exact trends that all the other markets are. We are right around the corner of recession. Things are looking to get a little bit shady, a little bad. Right now, the place that we are in, it could be a lot worse, and there are still many investors who are able to find those opportunities, and if you're able to hold through, I'm telling you, it will pay off. Most people are going to be down on their investment at this point, and everyone is feeling the pain, and this is a global fear and depression that most people are in a feeling of. I just want to say, stay true, stay strong, hold on tight, because we will get through this. Now guys, if you made it till the end of this video, like the usual, don't forget to subscribe if you haven't done so already. Like this video if you guys did find any type of value. Don't forget to check out the links down below in the description, where you can also follow me on Twitter and my Instagram. And if you also want to join my Discord or my community, don't forget to check out the link down below in the Patreon as well. For that group, you can get access to my buy and sell alerts when I do decide to start buying up this dip, my technical analysis from some of our best advisors, as well as access to a community of other like-minded individuals. Now, at the end of these videos, we always do a code word. If you guys are with me, hopefully y'all are still are. Don't forget to comment down below glasses. If you guys made it till the end of this video, comment down below glasses, comment down below glasses, comment down below glasses. Just as a reminder, happy Father's Day, you guys. Thank you again for watching. Have an amazing weekend, and I'll see y'all soon. Peace.